Hi, I'm Victor. Welcome back to my channel. In this video, I'm going to be covering a ocean freight company by the name of ZIM. They carry freight from different parts of the world to different parts of the world, predominantly from China to the US, China to Europe, Europe to other places, and so forth. They have been growing their fleet of ships and growing their capacity, and they've been really operating well. Shipping rates have gone down significantly. A few years ago, they're really high, and companies were making lots of money in this industry. But now it's harder to make money. I wanted to analyze ZIM. Their stock price has really come down over time, and I wanted to see if it was a good investment, if it was worth, putting more capital to work with ZIM, if I should just hold the shares that I own, or if I should sell off the shares that I currently have with ZIM. Do me a big favor and subscribe to my channel. That'd be a big help to the channel. Like the video, that would create more buzz around the video. And really important, comment on the video. I'm actually going to change the video format this time around based on a comment I got with one of the viewers. The viewer wanted to see how I draw the information out of financial statements and put them into my model. So I'm going to do that for this video. This video is going to be longer than my typical videos, but I wanted to show, step by step how I look at financial statements and bring out the information that I then put into my value calculator and really analyze the company overall. So I'm going to take a step-by-step approach, and this video is going to be longer than usual. Love to hear your comments, whether you like the longer videos or you want me to go back to the really short ones, or maybe a combination of both. So let's talk a little more about ZIM integrated shipping. Let me go over my process first, which I think is going to put the framework around this video since it's going to be longer. First, I want to know in a company if I want to be an owner in that business, if I understand the business, if I know when it's being run right or being run poorly. I want to know the industry and see if it's an industry that I want to be a part of. Second, is the management team doing a good job? You can have a very good business, wrong management team, and the business suffers. So I want to know that the management team is doing a really good job. I want to know that debt is less than 3 times EBITDA. A company with very little debt seldom goes out of business. But a lot of businesses, especially right now with high interest rates, they really get into trouble when these interest rates really go up. And it takes a big, quarterly interest payment just to maintain or to service that debt. And I want a discount on the stock. I'm a value investor, so I intend on making money on stocks when I buy them. I buy them at a discount. If I did my homework right, that stock's going to rise to closer to the value that I estimate over time, sometimes over a short period of time. So I want a discount on the stock so I can make some money. And based on the answers to those questions, I buy, hold, or sell. So the ZIM story is really a good one. They have been public for about 3 years. A group of investors and leaders in Israel decided to form a larger scale ocean freight company, and they've been growing their fleet of vessels so that they can carry freight from China to other parts of the world and India to other parts of the world, all kinds of different routes they service. So it's a really good model because the world is a global economy now, and we're having products shipped from one place to the other. It's really important. And it really showed how important it was 2 years ago when we had these supply chain constraints. Companies really had to pay a high rate to get their products or their components from one part of the world to the other. And they had to pay really, really high rates. So the story, I really like the company. I think it's a good, sound company, and I like the industry. So shipping rates a couple of years ago really went up, and they stayed up for a while, which made, these freight companies or ocean freight companies really, really profitable. But since then, they really went down. One thing that is encouraging, very recently, rates have begun to pick up. I think that China's coming back online after being shut down due to COVID, and it's creating more demand for freight. And those demands hopefully will make these rates rise. As rates rise, ZIM's going to make more money, be more profitable, generate more free cash flow. I believe that ZIM is currently discounted by 226%. How do I get there? Well, I get there by discounting the free cash flows that ZIM's going to produce in the future. And that's how I like to discount companies or value companies. It's based on all the cash they're going to produce. This is consistent with a lot of super investors and really legendary investors. And the reason for it is that a company will generate cash, put it on the balance sheet, and then figure out how they're going to return it to investors. So that's the purest way of valuing a company. And that's my preferred method of valuing companies. In this case here, the company produced $459 million of free cash flow for the first half. In a minute, we're going to look at the income statement, or excuse me, the statement of cash flows and see where I drew that number. So I'm going to take the first half of 2023, and that's going to be my starting point. I'm going to be really conservative and just use the first half that they produced this year and then grow from that point. I expect they're probably going to produce more free cash flow for the remainder of 2023, but it's a good consistent number to start with. And over time, I'm actually going to decrease the free cash flow they're going to produce in the first 4 years by 10%. So these numbers actually, if you follow them, they're being reduced by 10%. Now, the terminal value, which is all cash flows beyond year 4, those are all cash flows that I expect. They're going to grow at 2%, and those amount to $3.2 billion. Discounting them by a really high weighted average cash capital of 14%, I get to a present value of all those free cash flows of $2.8 billion. That's what those cash flows are worth. If I bought a bond, that's what the bond would be worth. That's the net present value of those cash flows. I'm going to add the cash because that cash is the net present value of that cash is exactly what that cash is. That cash is on the balance sheet, gives us security. Company can be in very good standing with all its creditors and be in good shape for the next 10, 20 years. The debt is only $83 million. Very good job, ZIM. Way to manage your debt. That way all these high interest rates are not going to affect ZIM. The equity value for that company, which is the net present value of its cash flows, add the cash, take away the debt, is $3.8 billion. But the company market cap right now is only $1.1 billion. So that's how I get this massive discount of 226%. So if the company operates and really goes on, it's just going to be a value generator for me. The debt to EBITDA is super low, $83 million of debt. They create EBITDA. Basically, they can pay for their debt just by operating the business for 1 year or less. Now, where did I get those numbers? Let's take a look at the income statement, balance sheet, and statement of cash flows for ZIM. First, where do I find those? So just a quick tip, you can find every publicly traded company, you can find their investor homepage. And I find it by just typing in their symbol, in this case, ZIM, investor relations. And I had already typed that previously, so my computer already knows that. And then I get to basically the homepage, which is here. Once I get to their homepage, I look for their financials, and then I look for the most recent quarter, which is Q2 of 2023. I have it open on this tab, so I'm going to just jump right into it. Now, every company has to produce an income statement, balance sheet, and a statement of cash flows. So let's take a look at those. So first, for debt, you look at the balance sheet, and this company has very little debt. In fact, it's only $83 million. Now, you may ask yourself, why aren't you including the leases? Well, leases are directly tied to their revenue because they're leasing vessels and then generating revenue. So I believe that the revenue is really servicing those leases. So I'm not going to include those. Debt is evil because it's just debt. It's not really doing anything. You may have taken a loan out on a business you acquired. That business is not very good, and it's just debt. Or you bought a fancy office building and had debt as a result of it. So debt is pretty much a liability, a huge one for a business, and that's why I'm not including the lease liabilities for ZIM. Now looking at cash is on this line, $1.04 billion. So that's where I get those numbers that ended up on my model. Moving down to the income statement. The income statement gives us a couple of things, but the income statement really tells you what's going on with the business. If you see the top line revenue grow, that's very good. That's what we're looking for, is a business that's growing, thriving. creating new products. Customers love the company and continue to buy their products or services. In this case here, due to the rates going down, as mentioned previously, the revenue's down, but the volumes are the same. They actually have increased. So the company's operating well, but they're just subject to that rate reduction, which is in effect. So the rate reduction caused a big drop in revenues. If you just look at the most recent quarter, that created really a net loss for the company. If you look at the most recent quarter, last year they made lots of money, but this year they're actually losing money. But this is more of a paper loss, and I'm going to show that to you, show why that's the case in the statement of cash flows. So the income statement tells us what's going on with the business. It's the most, accurate way to measure a company's performance for the quarter, for the year to date, and for the prior year is looking at their income statement. Now we're going to move down. I'm going to skip a couple additional schedules that this company put into their financials and move down to the statement of cash flows. Now this is my favorite, statement, because it really does show, cash is the lifeblood of any business. If a business generates a lot of cash, they become super valuable. There's no secret. The most valuable companies, Apple, Google, Meta, look at those companies, look at their statement of cash flows. They are just cash flow generating machines, and that's why they're valued so much. So let's take a look at the statement of cash flows for the first 6 months and for the most recent 3 months. So the most, I'm just going to go to the most recent 6 months and see that, yeah, they are operating with a loss, but we need to add back depreciation. Now, why do we add back depreciation? Is because a company doesn't write a check for depreciation in a quarter. They actually already own the vessels. They already invested in them. And I showed you that they don't have any debt. And those vessels depreciate over time. And that depreciation has to be represented in the income statement, but it's not a cash event. So that's why we have to add it back. We also have to add back the lease finance charges. Why? Again, they didn't write a separate check for that lease cost. They have to add it back. And those are two big numbers. I wanted to point those out because they make a big impact on the cash flows from operations. The cash flows from operations ended up being $520 million. And I take away all the investments they had to make in capital expenses. And the capital expenses really are, how do I keep the business operating? I can't have machines or vessels or whatever that business has as capital equipment break down, because then I can't provide the service or the product to a customer. So that's why we have to reinvest in the business. In this case here, it's a nominal $61 million. So I take the cash flow from operations minus the $61 million, and that's how I get to the $459 million of free cash flow for the first half of 2023 that I use as my starting point for my model. The ZIM stock has really had a roller coaster ride over the last 3 years. It really rose during the times when we had the supply chain constraints and rates were really high. So they really were doing well. In fact, they got over $80 per share at one point. But ever since then, they've really gone down and are now trading under $10 per share. So I have a value of the company at $31.42 per share. So as mentioned, it's a very high discount that I see on the company. But I don't think the company is a big risky investment because they have a lot of cash. They continue to operate the business well. The market doesn't agree with me because it's really sold off on the stock. The stock is down year to date 42%. But here's a really interesting figure is if you would have bought ZIM, let's say at the latter part of 2022, let's say you bought around this point here, you would have had a significant part of your investment in that company returned back to you in the form of dividends. In fact, looking at how much dividends they've produced close to the $9.77 of dividends. So if somebody bought, let's say the stock at $15 per share, close to $10 per share of capital was returned back to you. So your risk really went down when they returned that back to you because you're kind of playing with the house's money at that point. So it's really interesting how much dividend they produced. And that was from the profitability they had in prior years. I don't think the dividend is going to be that high going forward, but as those rates continue to pick up, I expect the dividend will return. It will be a really reasonable dividend for ZIM. So let me follow my scorecard for ZIM. Do I want to be a part owner in this business, in this industry? Yes, I think the company's doing a good job. I like the fact that they're growing, continuing to operate at even greater levels than they did in 2022. The team is doing a really good job, the management team. Their debt is super low, especially compared to cash levels. Really big discount on this stock. So I'm going to keep buying shares of ZIM. I just think it's a really solid investment, and I will not be surprised if I double my money in the next 12 months, triple my money in the next 24 months. That's my video on ZIM with extended analysis showing you where I get the numbers out of the financial statements. I hope you found that interesting. Please leave a comment. Would love to get more comments from you. Again, I went extended and kind of showed more of the process of gathering that information based on one comment that a viewer made. I really read the comments and would love to get your comments on the videos and improve the quality. More importantly, comments are really useful just as traders and investors. I learn from other investors, and I would love to get your ideas, your comments, your point of view on a particular stock in a particular investment. So keep them coming. Would really appreciate that. I'd also appreciate if you like the video and also subscribe to my channel. That'd really help out the channel, and I'd appreciate it. With that, good luck investing in 2023.